So what's the big news for February? It's that the Bank of Canada dropped their overnight lending rate on January 29th by 0.25%. So that means the overnight lending rate is sitting at 3% and bank prime has dropped to 5.2%. So if you're sitting with a variable rate of prime minus 1% that is, your rate is about 4.2%. 5-year fixed rates are hanging out around 4.5%. They were as low as 4% earlier this month, in early January, I should say, but they've ticked up because of all of the volatility in bond yields. So what's going to happen? Well, we actually think at Spire that rates may come down a little bit, fixed rates may adjust down a little bit, but we think this is an incredibly fair rate band. Rates between 3.5% and 4.5%, I think, is where the Canadian economy is happiest. And we think that rates will probably sit in this 4 to 4.5 range for the duration of 2025. There's a lot of analysts calling for further drops to the overnight lending rate. I don't disagree that that will happen, but I do think that the differentials to prime, so the prime minus factor, is actually going to come in, and we are seeing that. So where a couple of months ago, you could have ended up with a rate at prime minus 1%, today, it's hard to find a rate around prime minus 0.7%. So that's really come in, even though the overnight lending rate and correspondingly bank prime has decreased. Fixed rates are very fair, again, between that 4 and 4.5 mark. And I think that that's really where I would take my business if I had to put my money where my mouth is in this current political and economic environment. So let's talk about the politics a little bit. Obviously, Trump has come out with 25% tariffs on everything except for oil and gas. We aren't exactly sure what that's going to look like. Some folks think that's going to be inflationary to our economy. Others think that it's going to be very detrimental. So there's really a mixed bag of opinions on what's going to happen with the overnight lending rate as a result of tariffs. I also think there's a mixed bag of opinions on how long those tariffs are going to last. Because there's so much uncertainty in the market right now, certainly at Spire, we've seen a real influx of clients wanting a 3-year fixed rate. They've really felt comfortable in this space and they don't want to worry about what's going to be on Trump's Instagram when they wake up on Monday morning. They just want to know what their payment is. They want to purchase a house at good, fair value and set it and forget it. That's very much how I operate. So obviously there's bias in our business because that's really what I believe in as well. I don't think your mortgage should be something that's stressing you out. Let's talk about mortgage renewals. As you all know, I've been talking about this upcoming wave of mortgage renewals in 2025 and 2026 for a long time. We're there, guys. And I'm seeing some really scary stuff. Clients across the country are just signing on the dotted line with their banks. They're leaving a ton of money on the table. And what I'm seeing is a real focus on rate to get the lowest cost. And unfortunately, that's costing a lot of clients a lot of money. So when you're looking for the lowest mortgage cost, you're actually looking for 3 things. You're looking for the best rate, sure, but you're also looking for the best product and the best person. So at the end of the day, I believe strongly in what we do at Spire, and we have a lot of clients right now that are stuck in higher rates, and we're working with them to renegotiate those rates to lower levels, maybe break those mortgages, refinance those mortgages into lower rates somewhere else. It is incredibly important that you have somebody working on your mortgage file that has access to multiple lenders and multiple rate offerings. Also, while we have such strong equity in our properties, particularly in Alberta, it is very important that you are looking at a sophisticated mortgage product that allows you access to refinancing and tapping into that equity should you need it. Here's an example. About 18 months ago, I had a number of rental property mortgages coming up for renewal. I had the option to renew those mortgages at about 6.5%. That was high for the specific property type that I owned, a single family home without a suite. And those properties were selling like hotcakes in Calgary. I made the decision to sell some of those properties and then take the equity from those properties and pay down my principal residence. Now, if I didn't have a sophisticated mortgage product with access to pull that equity back out of my principal residence, then I wouldn't be in the position that I'm in today. With rates in the 4 to 4.5 range, rents still elevated, and property prices still looking good in Alberta, I want to reinvest in the market. For me, I wanted access to that equity in my home, and I wouldn't have had that if I hadn't put myself in the proper mortgage product when my mortgage came up for renewal a number of years ago. So it's really important that as we're moving through this wave of renewals, we all quit talking about only the rate. Let's talk about the mortgage cost. What is the rate? What is the product? And who is the person that's actually representing your file and helping you get that overall lowest mortgage cost?